So today, guys, I want to talk about something that's really important because it's directly linked to your money, to your investments and crypto assets. What is the difference between a commission and a spread? These are really important things because a lot of it is lacking transparency. A lot of us are getting misguided and not getting access to the accurate information, and for those reasons are making bad decisions, poor decisions. And this is really something that we need to improve because we need to get away from traditional finance, from all the hidden fees, from all the lack of transparency, because we're trying to build a financial ecosystem based on trust. And without full transparency, openness, and fairness, it's going to be difficult to achieve that trust.
More and more people are buying and holding Bitcoin.
Bitcoin. Let's take a look at Bitcoin.
Some call this digital gold.
Everybody should probably have 1% of their assets in Bitcoin.
So most of us are familiar with what a commission is, but very few of us understand what a spread is. And a commission, of course, is simply when you pay a third party for goods and services, right? And this commission can be paid as a percentage, it can be a flat rate, but it's usually fixed and transparent. Not in all cases, but usually transparent. But when it comes to a spread is basically the difference between a buy and a sell order. It's that gap in between, which we'll look at an example in the next slide. But a spread is variable, and most of the times spreads are hidden, and that's why we're paying fees without even knowing, and this is a serious problem, right? When you look at, generally speaking, when you have zero commission platforms, usually the lower the commission, the higher the spread. And this is not necessarily bad because companies need to make money in order to survive, right? But the problem is the fact that they're hiding it, right? It's really important that if we want to create Finance 2.0, that we're fully transparent when talking about commissions and spreads if we have them. Now let's look at what a typical spread is. One of the most common spreads is the bid-ask spread, which we're talking about. So let's say person A would like to sell his crypto asset at £2.50, but person B would like to buy it at £2.45. The spread is in between the £2.50 and £2.45, so it's about 5 pence, right? So it's 2% in this case. So this is a natural phenomenon, right? It happens in financial markets and is normal. All right, guys, so it's great to understand that the bid-ask spread is a natural phenomenon, but the price spread is a problem. And here I'll give you an example, guys, of what a spread looks like. So when you're using, for example, the SwissBorg app, you'll see one BTC here is $11,278, and a competitor app, it's $11,298. So roughly $20 difference just in the spread. You guys can clearly see this in real time. But it's also important not only to look at the spread prior to the trade, but also execute the trade so that you can compare the results after. So this is not enough, but it just gives you an idea of what a spread is like, right? And this really needs to be transparent because a lot of these platforms that offer lower commissions are taking higher spreads in return. And this lack of transparency is something that we really need to fix. And we're really proud at SwissBorg because not only number one, we're transparent, but number two, we don't take a spread. We're using a smart engine to really execute at the best rates with zero spread and just commissions that are fully transparent in one box from A to Z. What are the biggest mistakes that us crypto investors make, right? Very often we look at the trees without looking at the forest. Usually if we want to look at the fees for a specific exchange, we're going to type the name of the exchange, fees, and we're going to Google search it. And that's it, right? Our research is going to be very, very limited because most of the time we do not have time, right? And we're very overwhelmed with our private lives and work and stuff like that. But the problem is what you see in Google is often going to be just the crypto to crypto fees. You will see a very specific and well-presented fee rather than seeing the big picture of how much it costs us from the very beginning, as in depositing fiat, trading fiat to crypto, crypto to crypto, crypto to fiat, and withdrawals. It's important that we look at the big picture to really understand how much money we're being charged and how much money we're spending to make these trades. So here is a good example, guys. Have a look here This is what you will see when you look at specific fees. When you look on Google search, you're going to have a table like this where you're going to have taker fees only and crypto to crypto, right? And it looks very sexy. It looks beautiful. It's like 0.15%. Wow, what a deal. How cheap is that? But unfortunately, that is just one bracket. It's not the big picture. And then here again, you see this crypto app, this brokerage app, also looks very attractive. But again, it's just one specific fee. It's not the big picture. But on top of that, have a look here. These desktop version exchanges, including the best exchanges in the world, have very high fees when it comes to fiat to crypto or fiat deposits. Here you can see 3.5% just depositing fiat or buying USDT, right? Then you add another exit, that's already 3.5 plus 3.5 just in commission fees without even talking about the spread. So you can see that the fees are significant here, guys, and it's something that we really need to look at when comparing with different platforms. Now, this is the reason why, and obviously I'm very biased, you all need to do your own research. SwissBorg, not only we're transparent, we're ethical, but we're extremely fair when it comes to fees. And a lot of people are going to see this percentage here. They're going to think, oh my God, 1%, that's so expensive. But when you look at the big picture, when you look at the forest and not just the trees, you will notice that SwissBorg will charge you for non-premium account users roughly 3% from entrance all the way to exit, 3%. If you go premium, then that is just, it's unbeatable. You know, our fees are by far the best in the market because we're one of the only ones who gets best execution through multiple exchanges with negotiated taker fees. So you can see this, the big picture, and then if you use one of the tier one of the famous exchanges, you're going to pay a minimum of 7 to 8% for the entire experience. And that is without the spread, guys. Because when you're using fiat to crypto on other platforms, the spread can go from 3.5% all the way up to 15 to 20%. And if you don't believe me, just look behind me at Trustpilot. This is a trusted review system here in the UK where you can directly find the experiences of users, real users, and you will see that with the commission and the spread, you can pay up to 20% in fees. And that's really what people need to understand. Don't look at that specific, kind of arranged table that seems sexy without seeing the full picture. Let's look at this, guys. This is something that really, really touches my heart and a big, big problem when it comes to zero commission platforms. You guys are being tricked. I was tricked until I met people who are more intelligent than myself that educated me, and then I dived deep into research, and this is what is happening when you're dealing with zero commission platforms. So number one, the most common practice we see here is zero commission is basically for a very significant step in the trading experience, right? It could be for only a specific product range, or it could be only for, let's say, fiat to crypto, but it's not going to be throughout the platform. So that is okay. As long as it's transparent and it's communicated to everyone, then that's fine. But in most cases, if there's zero commission and they're low in commission, the lower the commission, the higher the spread. As simple as that. And the higher the spread, the more hidden it is and the more of an issue in terms of ethics it is. Now, also a second point here, as you can see, it's also limited certain products that we're just talking about. And then here is something that's really smart and savvy, but really sleazy, in my personal opinion. This is a specific company that actually was pretending to give best execution, but they arranged something with the exchanges so that the customers did not receive best execution, and that therefore taking a big spread. This is in the news. You can look them up. We're not going to call any names out but we're just going to talk about the practices that have been wrong. This is a very tricky one here in purple. This is very, very sneaky in my personal opinion. This person is basically saying that if they can beat the rate that they offer you, the quoted rate, if they can get a lower rate than that, then they will take the spread. But what happens here, guys, is just like we saw earlier with the spreads, they're going to quote you a rate that is higher than the market. and then they're going to get a cheaper rate and take that spread. But actually, they didn't beat the market. They just quoted you the wrong rate from the beginning and are taking the spread nevertheless. So these are some of the tricky things that are being done and that are not transparent, unethical, and hidden, which is a serious problem. And then of course here, guys, you can see that some of these guys sell your data to high frequency traders. They sell it without your consent to government agencies and share to hedge funds and other big institutions. And why is this a problem? Because the more information they know about us, the better they'll be able to trade against us and predict our moves, you know? And so basically in that sense, they'll be able to beat us when trading, right? They'll have an unfair advantage. So these are some ethical issues that we're having in the crypto space. Number one, the zero commission is for a specific segment, maybe just fiat to crypto. Number two, it's just for a specific product, maybe only US stocks or whatever specific range. Number three, they're quoting you a poor rate and taking a spread there, which I find very unethical. Number four, they're selling your data to high frequency traders and doing unethical things like that, which is really, really unfortunate. So what does SwissBorg have to do in all this? SwissBorg is not only ethical, it's not only efficient, but it's the most effective crypto app to buy your crypto assets. Why do I say that? And obviously I'm very biased, so please test yourself. But SwissBorg will aggregate best rates on multiple exchanges, finding best liquidity, but more importantly, guys, SwissBorg does not take a spread, does not take any hidden fees, only the commissions, which are all fully transparent and easy to understand. So the rate that we quote at SwissBorg, rather than quoting you a poor rate and pretending to do well, we quote you the best rate that is available in real time on 4 different exchanges. And really, we execute with minimum slippage, right? Because it's very hard to execute with exactly at that rate, but our accuracy with a smart engine is extremely high. It's very close to 0%, especially for the liquid assets. So the Bitcoin, the Ethereums that have lots of liquidity, our slippage is very minimal and very close to 0% based on the rate that you were quoted. So very, very ethical. And for the less liquid assets, such as CHSB, of course, you have to understand here, slippage is very common because there's just a lack of liquidity. But even there, you know, we still have a limitation of 3% in terms of slippage, which, you know, on other exchanges, if you sell it, that slippage, when you don't have best execution, can be crazy. The other day, I sold crypto assets at 10% from the actual market rate, just due to the lack of liquidity, 10%. So we allow 3% for the less liquid assets, and whatever goes over 3%, it's under the expenses of SwissBorg. That's how ethical we are, that's how transparent we are, and that's why you need to trust SwissBorg, but always test for yourself. And in terms of transparency, you guys can see here, we're the only platform in the world to actually show you exactly what happened in the trade and to give you a detailed breakdown through multiple exchanges. And we don't just find the best rates, because real best execution is creating the best rates, right? So a final word and some really important takeaways, guys. Number one, it's not about finding the lowest commission, right? If you guys find a service that brings lots of value added into your life, then, you know, you pay for the services. I'm happy to pay. If I'm saving time, if I'm actually making money, you know, paying is a part of business. Everyone has to make money, right? But you have to be satisfied. So number one, don't always look for the cheapest solution. Sometimes the cheapest solution will actually be a very timely, it will have many issues and will not lead to the best return on your investment. Number two is, always, guys, compare relative to everything. Don't look at just one taker fee, crypto to crypto. Look at the full trading experience when you're trading. Number three, always look at the quoted rates if it's a zero commission before trading and compare them in real time. Also compare the post trades and the rates after it executed to see if that is the best execution or the best rates available. Guys, always look at the spreads and also compare for yourselves. I hope this video was useful. And if you like this content, please put a comment below. Share it with your friends, because really it's important for us to understand that commissions and spreads are different, and this will really affect our decisions and hopefully choosing the platform that is best for you guys. Thank you so much for watching and hope to see you soon. Take care, guys.